Hey everybody, this is Ray Halston and Andrew Mill with REH CPA. Today we want to talk about the tax implications of creating an LLC. A lot of times we talk and meet with small business owners and they'll make the statement, hey, I want to create an LLC so that way I can deduct my expenses. It doesn't necessarily work that way. I've got Andrew Millen here with me today. Andrew, what can you tell us about the tax implications of creating an LLC?
Yeah, we get asked that a lot. First, I always make sure clients know, like if you've got a small business that you're running and working in and you have expenses for that small business, whether or not you create an LLC or not, like those expenses are deductible. Creating the LLC doesn't unlock the door to now being able to deduct your expenses. So just understand that if you've got expenses for a business that you're pursuing, like those expenses will be deductible no matter whether or not you have an LLC opened or not. But creating the LLC is really like it's a good thing. I mean, it's definitely a good prudent business practice as you have a business that's growing and something that you're going to be pursuing. It's definitely something we recommend. But the LLC is really just a legal entity. It stands for Limited Liability Company. So what the LLC does is just kind of give some sophistication to your business. It's a legal entity. It now allows you to get a federal ID number, which is like a social security number for your business. It'll allow you to go open up a bank account in the business name. So all of those are kind of what we would call our best practices for small business owners that are running a business. Get an LLC, get your federal ID number, open up a bank account, run all of your transactions through that bank account. Those are all ways to really kind of structure your business correctly on the front end. But going and getting an LLC has not a single member LLC, I should add. You know, if you're the only owner of that LLC, doing that does not change your tax situation whatsoever. Like you are still taxed the same way with or without that LLC, and you can still deduct the expenses with or without that LLC. So it's kind of a misconception I feel like we have a lot with clients where maybe a friend told them or they've been Googling on the internet and like, oh, I got to get an LLC so I can deduct all my expenses. I'm like, well, you can, but you don't have to. Right. But again, it's a necessary next step to a business that you're going to be running, operating in. And what it does do, which is really probably the bigger tax conversation and the tax play, is it will allow you to convert your business to a different tax structure. It'll allow you to convert it to be an S corporation. We talk a lot about S corporations. They're a very popular entity structure for small business owners. So you can't you can't make yourself an S. Like you would have to have an LLC created or an Inc. created to create that S corporation.
And I almost always recommend that somebody go get an LLC when they start their business, because what we see is that people who don't do it, they'll start their business. They've got their federal ID number as a sole proprietor, and they've got all their contracts, insurance, bank accounts, and everything set up as that sole proprietor. And then when you go to get your LLC, then you have to get a new federal ID number and everything changes.
Yep.
And then that becomes a huge pain. So I always recommend people start off as an LLC and kind of go from there. Great. Really good information, Andrew. Well, if you have any questions about setting up an LLC and the tax implications of that, feel free to give us a call and we'll help you out. Thanks.